All right. Friday in SPY, we were basically flat, only going down 0.06%. But before we started to pull back, we were outside the upper Bollinger Band, and we did reach that price target at SPY 451. And it's still possible we hit that weekly level up there at 453. And if we break through the 453 resistance, we're likely going all the way back to the previous all-time high. Now, don't look too far ahead. While that is possible, we need price action to prove it, and that is going to be the weekly close above 453. And the reason I say let price action prove it is because there is a good chance from this critical resistance that we pull all the way back to fill this gap, which is right around 443. Now, as I always say, this is a bull trend until it's not. So even if we do pull back and fill the gap, if we find support and we start to bounce, that is still a higher low, which means we're likely going back into another higher high. And the only thing that is going to break this bull trend is proof from the price action that we're starting to make lower highs and lower lows, and we need to see that in the price action. When I say let the price action do all the talking, it means that we're not going to assume the bull trend is going to roll over and die. We're going to make the price action prove it. And in order for the price action to prove we are rolling over, we need to get a lower high and a lower low on this daily chart. And each and every week, we continue to put in higher lows and then higher highs. So until this streak breaks, we are simply following the trend. And as I always tell you, the trend is your friend. So if you are going against the trend, you are taking the most difficult trade possible. So going into next week, watch this critical resistance at 451 and 453. And if we break through those, that is going to be yet again another bull breakout. Although I think there's an elevated risk that we're going to pull back next week because we're outside the upper Bollinger Band and we have the gap to fill to the downside at 443. So while I'm cautious and I think we are going to fill the gap, anything is possible, and I'm willing to let the price action prove me wrong if we break 453 and continue to climb higher. Let the price action do all the talking and manage your risk around these critical levels, and your critical support will be down here between 442 and 444. If we hold above that retest of the breakout, we are likely just putting in another higher low and going into the 470s. And if we break below the 440s, we're looking for that strong support down there at 436. On the NASDAQ 100 triple Qs, we were flat on Friday, only going down 0.02%. And you can see why that is because we were a mile outside the upper Bollinger Band, and that's just way too far overextended in the short term. So it was very difficult for the bulls to continue to push higher. Now, I will tell you, these Bollinger Bands are expanding, so it's going to be easier and easier for the bulls to continue to push as those bands expand. But we do have gaps to the downside, and there's a great chance these gaps are going to get filled. So be aware of the downside gaps at 374 and just below 369. Because we are so far overextended, there's a great chance we go fill those gaps, put in a higher low, and then continue this bull trend. And while the triple Qs are above 370, there's a great chance we're going into the 390s, and then above the 390s, we're basically at the previous all-time highs. So let the price action do all the talking, and be aware that we're overextended in the short term and at risk of filling the gaps to the downside. And while that doesn't guarantee we have to fill the gaps now, we know there's a very, very good chance these gaps are going to fill in the very near future. While we have no idea the exact time frame, at these levels and at these overextended conditions, be aware there's gaps to fill, and we're very likely to fill them. Critical support will be the breakout right around the close at 370, and as long as we can hold above 370, we are very likely continuing this bull trend. The bull trend's getting a lot weaker if we break down below the 366 zone, and then we'll likely come back down towards 355 to 357. On the Dow Jones, we were up 0.36% on Friday, and the Dow is trying to break out above that resistance at 345, but we also have strong resistance at 346. I talked about on the weekly chart analysis just yesterday why 346 is so critical. So if the Dow Jones breaks through 346, I am looking for a continuation of a bull run. That will be a higher low into another higher high breakout, which means we're likely going to continue to run. And it's also going to look like we're breaking out of a bull flag double bottom look. Now, if we get rejected from 345 or 346, then we'll be looking for the gap fill right around 343, critical support right around 341, and a gap fill just right around 339. As long as we can fill all these gaps and still hold support, it could still be another higher low before we continue the bull trend. But be aware of the gaps below, because as we know, gaps typically get filled and they are at much lower prices. On the Russell 2000 IWM ETF, we were down 0.98% on Friday, and it looked like the small caps were trying to fill the gap at 190, but just didn't have enough momentum to do so. So don't be surprised if early in the week we continue this pullback and finish closing that gap. But as long as we hold the breakout at 188, this is still a bull breakout, which means if we come all the way back down to 188, and still get a bounce, we're still looking for a continuation of the bull trend to take us to the targets in the 195 to 198 zone. This is what I expect to happen, and I'm not exactly sure we're going all the way down to 188, But I'm very confident with the strong bull trend and the strong weekly charts in the small caps that we are going to push higher into the 190s. I'm instantly wrong if we start losing that support at 188, and then we'll be looking for the next support lower right around 184 to 185. On the ARKK ETF, I want to zoom out here and show you that it looks like we are finally breaking out of the bear market in the ARKK ETF because we're starting to break the bear market resistance trend line, which was that resistance right around 48. So when I zoom in here on ARKK, you can see we had a higher low right around 35 and we broke out to a higher high above 44. So it does look like with the bull breakout, breaking out of the bear market resistance and a higher low into a higher high that we could be regaining the bull trend in the ARKK ETF. And you can see the price action is above all of our moving averages. So this is going to be bullish as long as we can hold the breakout between 44 and 45. Now I do have an upside target that we're very close to reaching, and we are outside the upper Bollinger Band, which is right around 50 to 52. So don't be surprised if we need to get a test of that breakout all the way back down right around 45. Continue to push, and then from a higher low into another higher high, we should be able to reach the middle of the 50s. Now this is very typical when you get a bear market resistance breakout to come all the way back at some point and test the breakout to prove it's not a false breakout. And obviously if we shoot right through that retest and continue lower, then this was a false breakout and we're still in the bear market and still in the bear trend. So while ARKK is looking bullish, we need that confirmation of the retest of the breakout, which is going to be a retest of that support zone between 44 to about 46. If we hold that retest and continue to push higher, then we're out of the bear market and we're starting a bull market in the ARKK ETF. On the VIX, we were down 1.84% on Friday, and the VIX is down in the low 13s yet again. And this is exactly where we saw the VIX spiking last time we were in this zone. However, the VIX below 15 is still telling us we're in a low fear bull trending environment. So we're not getting cautious unless we see the VIX spiking out above 15. And then we'll be looking for the possibility to reach the zone between 18 and 20. On Bitcoin, we're currently trading around 30,350, and we're still in the bull flag between 29,000 and 31,000. So until we break out of this bull flag, we have no idea where Bitcoin is going from here. But because it is a bull flag, there is an increased probability we break out to the upside and go reach that price target at 35,000. However, if we break down below 29,000 and we break out of the bull flag to the downside, you instantly need to get a lot more risk off or use that risk level down there right around 28,000. On Tesla stock, we were up 1.25% on Friday, and Tesla is sitting right up against this resistance right around 282. And if we break through that resistance, we're likely pushing higher towards my price targets at 295 and then 312. Now, if we get rejected from 282, this could be a double top, which is going to be a breakdown below the neckline at 267. And we also have gaps to fill at 264 and 235. So just be very aware of this resistance right around 282 to 283. And if we break through that, then we're pushing to higher prices and we're looking for 295 and then 312. On Apple stock, we were flat on Friday and we're starting to hold above the support right here at 190. So it is possible we have a higher low at 188 and we're pushing towards 197 next. But in order to get confirmation that we're breaking out, we need to at least break this resistance at 192 and then 194. You can stay bullish above 190 or the support zone right around 188. And if we break that support, don't rule out the possibility we're coming down to some lower support levels between 182 and 185. The best way to play Apple is stay bullish above 190 because above 190, we still have the bull trend, which means we're likely going to continue to push higher. On the financial sector, we were down 0.67% on Friday. We gapped up outside the upper Bollinger Band at resistance, which is always a great time to lock profit. And then we got a bullish engulfing candle that's very close to closing the gap to the downside. However, in the financials, you can stay bullish above the 200 daily moving average, which means you're still staying bullish above 33.7. On the industrials, we were down 0.29%. Again, they were just way too far outside the upper Bollinger Band. So it's really just a pullback to overcorrect the overextended condition, and we still have the bull trend. The healthcare sector was up 1.5% on Friday. Price action is back above all of the moving averages, and we simply need to break this resistance right around 132 to 133 to get the bull breakout, and then we should start running higher towards the price targets at 134 and 137. On the energy sector, we were down 2.64% on Friday, and we did close the gap to the upside, got rejected from the 200 daily moving average, and if we continue this rejection, I'll be looking for the gap fill below at 73. That is going to be accelerated if we lose this support right around 80. So jumping back over the SP 500, we are at very critical resistance going into next week, and we are a little overextended to the upside, especially on the triple Qs. So just remember, when you get too far outside those upper Bollinger Bands, there is an elevated risk of a pullback, and we do have gaps to fill to the downside. Now, we're still in a very powerful bull trend, and there's still a lot of short sellers trying to call tops in this market, which is leading to short squeezes. So if we break through resistance and we continue to climb higher, it is possible we go higher before we fill these gaps. So don't just assume these gaps have to fill next week, even though I think there's an elevated risk that they will fill. That does not guarantee that they will. So use great risk management and be aware of all these critical levels. And as long as you're trading around critical levels, you have well-defined risk and you should be doing just fine in this market. Also, don't forget this is the last day to claim the discount on the Stocks Channel Trading Discord or Bank Trade Alerts, and also TrendSpider's flash sale will be ending today as well. There will be links in the description on how to claim all of those discounts if you're interested in any of those services. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.